The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Basil Chapman on the 6th day of April. My pleasure to be here Monday through Friday. Dow is up 36 at 20,684. S&P is up 470 at 2357. Comp index is up 42. Is that right? Oops, up 9 at 5873. We've got the VIX index at 12.15, still under the 13s. Amazing how the selling pressure just cannot be maintained. And the E-mini we're looking at here is up 8 at 2354. See these arch formations? Remember Chapman wave 5 over there? We've gone 1, 2, 3, 4. And this could be 5 to the downside unless we take out the high of yesterday of 2375. I'm not sure we're going to be able to do that just yet. But in the meantime, back at the ranch, it's that weekly chart that's really important because tomorrow, we get Friday at 4 o'clock, we get a close of this week. And if the downtrend resistance line is still active, and if the S&P is closer to 2343, the 9-period exponential moving average, than 2363, which would be a bit of a breakout to the upside, then we'll be looking at this as part of the consolidation, and I still have to keep calling it a consolidation. I don't have the weekly in a bearish phase at this particular moment. There are signs at 78% in the stochastic, MACD about to cross negative, that it could happen. I'm going as I always do, one step at a time. The daily Dow, the daily S&P are in sell modes. Yesterday, the SPY, that is going to be very interesting. The Dow and the S&P cash broke that resistance line, but look at this. The diamonds hit that resistance line exactly, that dashed falling axe formation that I call, that's a declining, expanding cone formation. It hit it exactly and pulled back, and the SPY did exactly the same thing. The SPY, there it is. Well, it just missed it by a fraction, but it went right up to the line and then came back down. My contention here is, and let me just go back to the E-mini because I want to show you the 120-minute chart. My contention is that we have started a correction in the Qs. That is the NASDAQ Index 100, the QQQ Trust Series. So if you're looking at the E-mini right now, you'll see that we stopped dead at this 200-period exponential moving average. There's a lot here that suggests that by the end of the day, if there isn't something that triggers a move in the E-mini to about a plus, well, we need to get to the 2361, 2363s, and then I have to kind of rethink about the timing of everything. Meantime, we are still short the Dow, short the S&P, short other areas, and we're actually also long. I do not want to be in some kind of bubble here that says everything has to go down. I'd rather be saying, let me just move this aside here. I'd rather be saying the weekly charts have made so many peak Fs or potential peak Fs. Let me explain what that is. In the Chapman wave methodology, we're looking for, from a most obvious low bar, we merely count each successively high peak. When you get to leg D and then you expect a peak D, other things can happen at that point. That's basically where you're driving along on the highway, and now there's some access roads that are coming on, and you want to slow down a little bit because someone's coming into the traffic. Basically, that's what we're looking at. It's the slowdown. It doesn't say, hey, you got a trend reversal. It just says slow down. So now let me just go through these again because I want to look at the QQQs. This is the QQQ. See that slap to the upside at 133.48, and then the sharp pullback intraday yesterday. There's the potential that this is what I call the right shoulder failure pattern. The right arm extension pattern. I was looking at the The MACD has got the deflection low, which is like a right shoulder failure pattern. And the stochastic has got an arch formation that goes over 80% and within 3 to 5 bars goes under 80% if there's a slight negative close today. So now what we're looking at basically is that I've got my leg E in the weekly chart. It's still leg 5. There is no top yet to the 5. But there's a hint that this is the one that could be the sharpest pullback in the weekly chart in quite a while. The MACD is flattening out, stochastic still at 93%. That is really good. But see this red little line right here? That is the relative strength index. And that's suggesting that we could be coming down. And the QQQ's made a peak G at 133.48, pulls back very sharply. Let me get rid of this, and I want to show you a couple of other things. The IWM has been acting really weakly. Look at this, IWM, just poor action. And that's a peak C in the weekly. Now, I've got so many Ds. There are 1 or 2 Cs, but almost all the key indices have made a leg D with a potential peak D, except for the QQQ series you saw here. So this is still leg E. If you go to the New York Stock Exchange, NYA, you'll see a peak D, and we've been pulling back, and it's testing the 9-period moving average. And the daily is not looking all that strong. The MACD and stochastic are very poor. I'm suggesting to you that it's how the QQQ, and let's go to the SMHs, which is the semiconductor index, trading at 78.61, down 15 cents, making the arch formation, made a peak G the other day, and a whole bunch of tests at that 80 level, about 6 of them. This is the 7th one yesterday. Yesterday. And today, we're going to be watching this real closely to see whether or not the semiconductors with really poor technicals are able, what I showed my subscribers this morning, you see this first vertical line at peak D back on the 21st of February, very strong technicals. The next high that was made at peak E, and that was right there on the 21st of March, a month later, at 79.98. Look, way weaker technicals. And look what happened a few days ago on the 30th of March at 80.05. Is that correct? Yeah, at 80.05 on the 31st it should have been. Look at that. Very poor technicals. I'm suggesting to you that the crack has to be that the semiconductors start to lead the market lower. I should add that we are short via a different instrument, the semiconductor index. Now look at this. Gold had a really strong move. Last night I'm looking at this, I'm saying, wow, if it breaks the high that was made in gold and continuous contract on the 4th of April at 1263.70, that's really a very positive sign. But if it fails there and this trend line that I've drawn in cannot be pierced, then gold could be saying, look at the dollar, that the dollar's strength, even though it's not fantastic strength over the last 5 days because all it's doing is holding in a sideways pattern, the close has been pretty much the same almost every day, but it is holding well. And that's suggesting to me that the 5 elements that we're looking at, those 5 L's, Goldie, Dolly, Vixie, Bondy, and Oily. I'm including oil because look at oil. Oil is at very strong. It's up 49 cents today, 51.64. I like it. In fact, we went long a multinational. I don't know if it's going to hold or not, but we did go for the first time, and I couldn't even remember how long. We'll see what happens. So, Basil Chapman, Tiger Technicians Hour, Dow's up 45, S&P's up 576, and I forgot. Did I show this? Yes, I did. Did I show this? Yeah, so we should be making a leg C in the 10-minute E-mini. We'll be right back.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new Market-Safe Core Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI oil, and sugar, in one powerful CD. With no pricing caps, you can potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, let me just finish those, and then I want to go to SQM. I was asked about Peaky and the Den. I need to do this. There we go. Okay. So we were looking at, I just want to do that again. I want to look at the GDX in relation to gold. GDX is holding kind of okay. It's a high-level consolidation. I've got it as a Chapman Wave stalk leg formation. This is the leg. This is the neck. Could even go to a D, and then it comes back and retests the high of the 22nd of March of 2356. So the weekly chart is the one thing that's been concerning me somewhat, because it really is not showing the kind of strength that it should. It needs to be 23.38 down 10 cents right now. It needs to be at 24.25, somewhere around there. And then I'd say, okay, I like this action very much. So far, it's just chop, chop, chop to the side. Let's look at silver, and silver suggesting nice move to a peak D. I think this is to be consolidating here. MACD is good, not as good as it was at that last peak D. That was much higher. The long-legged doji on the 22nd of February, continuous contract of silver is at 18.23, up 0.04. I like it. I probably wouldn't short it. I'd be wanting to buy it if it did pull back to the 17.80s. What would I do with it right now? You know what I would say? It's so close to testing a resistance line. In fact, there's a Chapman Wave inside track repellent. Let me just do that. Repellent. Resistance area it's coming into, but if it breaks out into the 80, yeah, that's exactly what I was saying. Yeah, if it can break out above this peak D and close nicely above 1843, and the other one is 1854. I would just make it real clear. A break in silver into the 1860s would be really positive action, both in the weekly and the daily and the monthly. So let's just leave it at that. So what am I doing right now? We don't actually have anything in silver. The SLV, haven't even updated that for a while. Yeah, I haven't updated it. It's exactly the same thing. It's gone to a D underneath the previous D, and that's usually a kind of a short-term negative. It says it needs to pull back to regain some energy to really break out. Leg D should have gone above the previous high. So all I'm saying is that silver looks great. but just on a short-term stance, I'd say that it needs to consolidate a little bit longer. Okay. High-grade copper, we want to look at high-grade copper. High-grade copper is at 2.67. It's just stuck in this range. Remember, I drew the rectangle quite a while ago. Then I made the rectangle narrower. And I said now it's got like 2.58 to 2.71. That's 2.72 starts to break out to the upside. And it's just kind of stuck there. So nothing to say other than it's not breaking down, it's not breaking out. I'm missing one thing, the TLT right here. TLT is pulling back. This is really interesting because my suspicion is if the Dow starts to move, let me just draw this trend line. Same thing. Remember, I do the same thing over and over and over again. Yes, there are a lot of things that I do because I've built up so many proprietary and really individualized techniques over the decades that I've done this. However, you can keep things as simple as choosing 2 points, maybe 3 points to use as a trend line. And then I always put the inside track because that you'll learn that it's an amazing thing. Just that one little, those 3/16ths of an inch or a quarter of an inch can give you so much information between two channel lines, right? So I'm anticipating that there's a little bit more. Oh, I didn't finish that. I think we went to the break. I said, I think we should be starting leg C in the, yep, there it is. Leg C in the 10-minute E-mini. Let me just go back for 1 second here to the bonds. I wanted to finish up what I was talking about before. So the TLT, the weekly chart suggests we're in a trading band. That's all I'm going to say. Now, I wanted to show you we're in a trading band. That's number one. And number two is within that context, yields aren't quite ready to break to the upside, but they're also not ready to break down. Just keep it as simple as you can. Same thing with the VIX. It's just not quite ready to break into the 13s. I think it's trying to build momentum to do that. It's at 11.99. I think when it happens, it's going to be really sudden. Meantime, chop, chop, chop to the side with slightly lower highs and slightly lower lows. That's what I'm thinking. Now, let's go back to SQM, which is the question I had. Look at that amazing move of 5.55% today in SQM, which is Sociedad Química Minera. It is a Chilean chemical and mining company, a wonderful monthly chart, leg D. But if you look at it in the context of making a high back in July of 2011 at 67.18 and then plunging down to the 11 or 12 area, this is a retracement failure. The question I had was, what is the meaning of this breakout above the candle of March of 2014? And all I can say is what I would have done, I didn't do that, but what I would have done is I would have drawn the left side, Chapman wave left side, right side price time match to see, is there any chance that there's a breakout before or after the measurement of the left side number of bars to the right. So let's see if that's going to be the case. I love when it's a mathematical perfection. In other words, you've got exactly to the bar the number on the left to the right for a breakout. Whoa, look at this. So here's your pivot point down at 12.08, July of 2015. So July, that's 4 years after the high. It was made at 67.18 July of 2011. And all of a sudden, from this very ugly candle where I would draw it from, because I always like to go from the left side major resistance, the wall. This is the Rocky Mountains. This is the Grand Canyon on the left side. So I take that bar, and my eye just immediately says, hey, I'm way past a measurement there. I've got to go up against the wall. And once that, whoops, don't talk about walls here, especially a Chilean wall. All right, what we've got is the wall right there at, oh, I just changed it. The ugly candle of July of 2013. Oh, well, these Julys, huh? Of July of 2013. Opens at round number 40. Has a high of 40.21, plunges to 27.50 and closes near the low. Once we go above this candle right here, this is the body of the candle that we'd be looking for to see challenging the high. And once you've broken above it, there's the left side low. That goes all the way to July of 2017. This is a monthly chart. We've broken above that high of 35.68 already. And that's a very positive thing. It says that there's excellent strength. Look at the MACD still climbing. Look at the stochastic at 89%. This is very positive. And even though I've got it as leg E, it could be E/B in the weekly chart. Very powerful. and the daily I wouldn't have said that. I would have said, oh, look, leg E, today should see a pullback. No, spike. I don't know what it is, because I looked at some of the chemicals, Dow and others, just a couple of days ago, and yesterday, in fact, I looked at EMN, and bam, it's to the upside. So this is a very positive asset. SQM at 36.12, up $1.88. I love it. So I can't remember, are you in it? What was the question? Basil, SQM, please. Thanks when you get a chance. Still one or two more legs, intermediate term. I would say that its action now says that it's raised the base, because in DOE, if you have a very strong extension, that's what I was saying about Amazon yesterday, the day before yesterday and yesterday, that very strong extension essentially in the beginning raises the base of support, because you've already broken to new territory. And so we'll talk a little more about that. Dow's at 59. Let me just look at that 120 minute. Oh, I'd like to look at the 15. Let me just do this here. Okay, this is leg C in 5-minute chart as well. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So let's just quickly look at this. Look at this beautiful bowl formation, which is really a kind of a powerful image for the E-mini 10-minute. And the way I'm looking at this, it's really going to be very interesting. And I'm suspecting one by one, we're going to get a breakdown. So this is leg C. I think it's going to stop fairly soon. It'll go to maybe a D, and then it'll sort of flatten out towards the rest of the day. I'm not sure that we're going to have an acceleration into the close. This is with the Dow up 61, S&P up 7.81. In a sense, it's a give back of the huge decline yesterday, which is technical, but also emotional. When you get the emotional decline without the follow through the next day, the futures were down 6-7 points earlier on, but then we've turned around. So that's important to keep in mind. And what really happens in this particular instance, you see the steady MACD rising here. That's just buying pressure. So there's still buying pressure, and I don't think it's going to be all over just like that. That's why I've called it a rotational correction. I've had no choice but to call it that. Until the Dow cracks 20,570 or so and really starts heading down into the low 20,500s, I think that this is chop to the side. The fund managers are feeling out what's working and what's not working. And that's what you can see in the market. I had a quick question about PAS, that's Pan American Silver, trading at 17.82. It's unchanged right now. See this kind of pattern when you go to a peak G with all these different candles with the Chapman Wave Silent Doji on the 7th of February at 21.29 makes its high. 21.24, Chapman Wave 2-bar reversal with a silent doji, comes down very sharply. Trough A, B, C, D, E, F. When you make a trough F, you can rally, not you, the price of the whatever it is you're following can rally, but unless you make a V-shaped formation real quickly or a sharp U-turn, and you don't go sideways, the rebound could be very strong. But once you start to waste energy with the rebound going sideways, I'm looking at this askance, and I'm just saying make it real simple. At 17.82, if you're long, I would just say fine, you can be long. It's not a great chart pattern, even in the weekly chart or even the monthlies. Oh, monthly is okay. But the daily is worrying me only in that the pattern's taken too long to break out. 3 days ago, if it broke out, I would have said, I like that cup formation. Now it's just hanging out. I don't like hanging out. I want action. So what I'm looking at here is if you are long, I would just say on some part of your position, put a stop at about 1712 below the trough that was made just 4 or 5 sessions ago. Why? Because 1668 would be the 200-period moving average support. But if you're long and it does break, and it does it by later today or tomorrow, and it can go right into the 1803 area, 20 cents higher, and for a silver stock, once they move, 20 cents is nothing for a stock like this, but it's got to move, okay? Then you get in the cup formation, then you'd head towards this downtrend resistance line, which depends where it is, but you want to make a leg D above 18.43, the high of the 22nd of March. So if you're long, that's okay, but I would take something off if it breaks down under that level that I spoke about a moment ago. If you're long and it starts to move and it takes out the high of the 22nd at 18.43, I would add a trading position and just see where it goes with a trading stop, a tight trading stop on that second position. All right, that's that. Next question I had was, let me see, AMKR, MCOR, I think, yep, I haven't looked at it in ages. I don't think I've even got my notations back. Yeah, I used to have it all notated. MCOR, which is MCOR Technology, wasn't it involved either biotech or semiconductor? I can't remember. Anyway, what I'm looking at here is it's A, B in the. This is not a nice chart. MCOR Technology. Oh, this is exactly the same pattern that we looked at here in a bigger scale to PAS, PAAS, except this is a weekly chart. Let me just show you something very important to me. I'll do this real quickly. Take the low bar back in around about July of 2015, and I'm going to add. Oh, I was just doing this a short while ago, and I said, one of these days I'm going to spend some time and talk about how many charts go peak A, peak B, peak C after a major decline, and then stall. And then what do? Do you call the next high a D? Well, in this case, it's easy because you've got underneath it, you've got a gray A, a gray B, a gray C, and it does go to a D. So now we can say this becomes an E, an F, and then it goes to a G, F, and then it goes to a G. Now, what I would normally do is I'd go G, everything pull back, it looks like a perfect G, and then it rallies. And I look back and I say, just to be safe, keep it in mind. We aren't trading it, so it doesn't matter. We're doing the notation because in the Chapman wave methodology, you want to be right on your last notation. That doesn't matter why or how or when. Doesn't matter what you have to correct. You want to be right. And to be right, I'm saying this is a G/C. Why? Because you've got your cup formation, and it means if there's just a slightly higher high, it can go to a D and then fail at a double top. So this cannot be leg A because the bar that made the low cannot be the high unless it's a peak D. So this is a gray A right here. And if it goes above the high that was made over there on the left, so this is gray, and it activates this left side high if it breaks above 12.48. So at 12.49, I immediately go, aha, could be a brand new leg A, or it could be a D. So I put D/A, and then I assess where the MACD and stochastic is. If it's under 80% or it's just about to turn back down under 80%, I say, aha, double top failure pattern. This side was way stronger than that side. Be careful. But in the meantime, we go one step at a time. We have to look at the daily. So here goes the daily. Trough right there in February, and it goes peak A, peak B, C, D. This is a gray A. This is an E. I'm calling it an E for now because the MACD looks like it wants to turn down. Stochastic's turning down. I'm just going to leave it as an E. No positions other than to say I'm watching it closely because I believe that there's a real good chance that if in the next 3 sessions it takes out the high of 1176 from the 3rd of April, that's a big positive. But if it starts to fail from here in the next 2-3 sessions, it takes out 1120, the low that was made on the 27th, definitely an E, and it's in a sell mode in the daily, then I got to watch this as a right shoulder failure. Amcor 1140 acting well, but I'd be watching those levels very closely. Under 1120, be careful, it could pull back deeper, and above. What did I say? It was 1176, the high of the 3rd. That's very positive. It recycles to an F/C. So that's the way we're doing it. And so we don't have it. I don't have to be absolutely convinced that is an E or whether it's a B. I'm just saying I'm watching it. That's all. But if you're long, those are the parameters to watch for. Good. Okay. Next question I had was a bunch of questions. Contact and oh, very nice. Refund for that night that we slept at the airport. That was a good email to get. Okay, Nike, Costco, Home Depot. We'll be back. We'll be looking at different stocks when we get back. Basil Chapman, Tiger Conditions Hour. Dow is up 55. S&P is up 6. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi folks, we're back. Let me just quickly do this. This is the 2-minute E-mini chart that I shown briefly earlier on. I was wondering what would happen, how it would get to a D. Well, it got to a peak C and then pulled very sharply down. That was at 10:40 this morning at Eastern time, obviously. 23.56 high, pulls back down to the 23.50 low at 10:42. Just a real quick 2-minute decline. But wait a minute, starts a brand new move. This is what I call a gray A. Why is it a gray A? Because it's underneath the Grand Canyon left side cliff that it pulled back from, and it goes gray peak A, gray peak B, gray peak C, and this is so fascinating because my rule of thumb is in a Chapman wave overlapping wave, if you can get a peak C, pull back, and then get an underneath it an A and a B and a C, when it goes to D, that D should be quite sharp, and immediately D, maybe even E, but really quickly, when it turns down, it should come back and retest the high. In this case, 23.56 is the high. And what did it do? It went to D twice. D pulls back, D again pulls back, fails, and now it's down. And now we'll see what happens because that candle tested the high. So a little bit of technique there in Chapman wave methodology, and that becomes a blue D. I use blue as my main color, right? So anything can happen from here because it's achieved what it was supposed to do. So I'm looking at Amcor, and that was my reasoning for looking at Amcor and saying. So a couple of questions. Let me go from the very first one, which came early this morning. Do you want to know about, what was that today? 4-6. Oh, 12:26 a.m. GT, you were up real early. So what are you looking at? KRE. KRE is of course, the regional bank. Made a peak E top, pulls back sharply from the 59s, goes down to the 51s, trading right here at 53.64. This arch formation, this lowercase h, I think it says that you're looking at time and price for KRE. It's had a fantastic move. I think it just needs a little more time, and maybe at 53.64, it needs to test the 50, maybe even the 49 level. That's my thinking right now. That's what the chart formation says. I'd be surprised if it breaks into the 56s within the next few days. I think it's kind of stuck here. It could even make an M pattern, but more likely it's going to make low lows and lower highs. It's KRE trading at 53.63. Regional. Let's just do Bank of America. That's part of the question. A lot of people have asked that. It's exactly the same thing. We're looking at chart after chart that are daily sell mode, weekly in the banks, the bank stocks. Most of them are in sell mode. Look at Goldman Sachs. Same thing, same pattern. We just see them over and over. They need time. They've had a spectacular move. They need time. That's another reason why I wasn't afraid to go into the short position on different indices And some stocks, we actually got stopped out for real tiny losses or tiny gain. And I'm happy with the positions we have right now. So the next question is, let's see, let me move down a little bit. We're going to, Caterpillar. Caterpillar is almost the same sort of thing. It's had a big move. It's made a peak C1, C2 in the weekly. It's only at B in the weekly. It looks fabulous. This is a slightly better chart in that it's really a sideways move. If you go to the long-legged doji candle and if you go to the 97.40 high back in December the 8th, we're really being slightly higher, slightly lower. I'm going to do a big oval pattern right here, and I'm going to say this to me could turn out to be some kind of a Chapman wave. This is maybe a pregnant stalk leg formation. I don't know what to call it, but it definitely is not a rectangle. It's more like an oval. So I'm watching this real closely. It's on my list as a major stock to keep in mind for this next phase of the bull market. I hope to have a webinar sometime in the near future where I'm going to talk about the next phase in the Chapman wave coda phase. And we'll talk about that, and we'll see whether Caterpillar and Deere and these major industrial type companies fit in there. Next question is XOP. Well, if you look at XOP, which is the S&P Spider S&P Oil and Gas, it's got almost the same pattern, except it hasn't rolled over yet. And I'm looking at this, and I'm looking at, let's just say we go to ExxonMobil, multinationals. You see, the cup formation that I've been talking about seems to be some validity in thinking that because crude oil is moving up, that the multinationals are being helped a little bit at this particular point. We do own a particular multinational. We just started the position yesterday. It's a tentative thing. We're in it. We're also into some in the utilities area. I'm just experimenting here because I think we're in a rotational formation that says look for other areas that have been battered and that are now showing some sign of potential upside move. So that's what I'm looking at. Yes. So let me just go back to the question of XOP. XOP needs to, this is the monthly chart has made that peak C. It really hasn't gone to the 200 period moving average of 46.15. It's at 37.54, up 64 cents. I like it, up $1.70, 1.71%. But I need to see it break. And by Tuesday of next week, I wouldn't want later than Tuesday, it has to be close over 38.64. To me, that's really important. It's going to help all the others as well. Oh, it's the others that'll help this. So the next question was Nike. I have not looked at Nike for ages. Remember, I said I've got a sell signal that is my hat trick top, meaning that the monthly chart was about to make an F, peak F, that the weekly chart was about to make, what was that at that time? A peak D, and that if the daily gave me the sell signal, I thought that there'd be a long time for a decline, and that occurred way back right there. That's a Chapman wave right arm extension, or it's called the Rogue wave at 68.23, the 23rd of December 2015. Everything was set for a decline, and you get that one news-related spike that holds above the previous high. It's usually in a daily chart, just long enough to have the bears say, oh, no, I'm covering. I've been wrong every other time. I'm getting out. And for the bulls to say, oh, why did I get out? I'm going to go back in. And they go back in. And within hours, it's not only back where it started, but it starts to go even lower, and the bear market continues. That's the road. And not only that, you got volume. That is really a big negative for that particular pattern. So I'm thinking here that Nike is bouncing around. All I can say is that it's made a peak E in the weekly chart. I just think chop, chop, chop. It's made an arch formation. I would not be surprised if rather than go into the 57.50s, Nike pulls back and tests the ugly candle of the 22nd of March, round number high of 55 and a low of 53.76 over the coming 3 to 5 sessions. So remind me again to see if I'm wrong or whatever it is. Let's look at Nike again, because if it does hold well, maybe it can move a little bit higher. Let me just put this E in here, right there. E. Okay, got it. Okay, so now we went to the next question was, Costco. Costco was just there the other day. Don't often go, but went there. And I always wonder whether or not I'm really getting a bargain for my, what is it, 55 or whatever dollars. I don't know if we save that much. I remember hardly ever buying anything. Oh, big spike up. Leg C at 170.61. I'd drawn this yellow rectangle in and said, I think that's the trading band for the next quite a while. That is the trading band. You know, it's a great company. I don't know how they get such good products, but they really do have good products. All I can say is that it's in a trading band until it breaks under 164. I think it gets chopped around to the side. And we will look at the VIX when I get back.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. I also like to praise when praise is due. So Delta, which had a flight cancellation on my way while we were going to Raleigh, North Carolina, one weekend just for 2 days, and we were snowed out, and then it froze over. It was just, in fact, they shut it down, but the pilot came to us and said, hey, I don't know why they shut it down. I was prepared to fly, but they shut it down, that's it. And then the ticket guy said, oh, they shut it down, I better put down, shut down. So anyway, Delta has just sent something saying, a refund for you. We processed a refund on April the 6th, 2017 as follows, and they give me the ticket number, etc. So how much did they refund? Oh, the refund. Well, at least we got a refund. It didn't cover anything very much, but a refund nevertheless. All right. Let's go. So the RTH is a question about the Van Eck Vectors Retail ETF. It's holding very nicely in the middle of the range. And that's really quite a surprise considering what Amazon's doing to so many of the retailers. But if you look at it, this chop, I can give you the parameters, 78.85 up 58 cents. If there's a close above 80.29, a close above 80.29, the high of the 21st of February, that'll be really positive action. But if there's an H pattern and we make a lower low and we go underneath, the RTH goes under 77.10, doesn't even have to close, it just has to go under it. That's going to be a negative and say, uh-oh, sales are going to be poor, continuing to be poor. So we watch this RTH very closely. What did I say I was going to do? There's a question I had. We did Costco. We didn't go. It was in the VIX index. So look at this. Here's the VIX index. Plunges again. It's at 12.08. It almost hit 13. Oh, it did. It hit 13.22, and then all of a sudden pulls back. You see the steady rise in the, although it took it out by a fraction, it went right back up again. You see yesterday, you see this rising trend line in the VIX index. Unless you get price deterioration in your indices, all it's saying is that the VIX is attempting to give a sell signal to the market. The market hasn't heard it yet. It's just ignoring it. I'm making it real clear. The VIX index needs to close in the 13s, followed up by 2 more sessions in the 13s or higher for this market to take it on the chin, for the Dow to break into the 20,400 area again, for the S&P to plunge maybe another 20, 30 points. And until that happens, it's just chop, chop, chop to the side. But what's really interesting is that the QQQ series, failed to even rally to the opening of yesterday, which was at 132.68. So let me just quickly sum up. I'm not sure how many seconds are left, but the QQQ series seems to me that there's a chance, based on the negative technicals, that what we saw yesterday was at least a shorter-term top. Let's call it a near-term top, because we don't even know. Even today, we don't know if it's a peak or not. But if it is a peak and we pull back, and you go into if the Qs go into the 131s, that's the Power QQQ Trust series, that's going to be a negative and say to me, it's more likely a peak F than a peak B. That's number one. Number two, the weekly candle. If we close lower on this candle, and next week, if we take out the low of 131.56 next week, if we close, the Qs close under 131.56. That'll be the first sign of some kind of a short-term top in the QQQ series, and that would include Amazon tomorrow's Technical Friday. We'll look at all those other charts. So let's just make it real clear. We're continuing in the sell mode in the dailies. The weeklies need Friday at 4 o'clock to tell me where they are. At this particular point, the Dow, although I've got a down arrow, it's really not an official. Actually, I haven't put the down arrow yet. I should have put the down arrow. But I need the MACD to close negative and the stochastic to close under 80%. And I want the price to close under the 9 EMA of 20,600. So it needs to close there. So I hope that we're all clear here. Crude oil seems to be rallying. We'll be back tomorrow. Have a great
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.